Welcome, everybody. Great. So let's get started. So I'll ask you very kindly all if you can just make sure that you're on mute so you can listen through. We will have questions and answers towards the end of the webinar. I've got a team of experts with me today with regards to tax, short-term lets, and also Avirman from Lendlord, the CEO and founder of Lendlord, prop tech platform that you can do deal analyzing, sourcing, and manage your portfolio. Just to let you know that Avirman will have to leave us shortly. Today's got an investor meeting. So we're going to go through the house price markets and indexes. But what we'll do is we'll introduce everyone and then we'll let Avirman show you the Lendlord platform and how we've integrated this with Fabrik and how it's helping our investors. So just share screen with you quickly. Just bear with me.
Absolutely. Okay. So hello, everyone. So I will start. I'm Avirman, co-founder and CEO at Lendlord. Lendlord is a tech platform. We help property investors and landlords to do mainly three things. One, to invest in a smarter way. So we have access in the platform for properties that are now up for sale. And the nice thing with Lendlord that you can analyze the potential return. Either if you're going to use this property as a buy to let, or if you're going to use it as a buy to sell, basically to flip this property. So you can see if your numbers stack up for the future. You can also run different scenarios, what if scenarios in terms of best case scenario, worst case scenario, and see your numbers and then make better decisions based on data, less on intuition. And the invest part of the platform, we can also get some statistics about the postcode and about the property, which should help you basically when you make your decision to acquire this property or not. Then on the manage section of the platform, we help existing landlords to manage their existing portfolio in terms of the performance of your properties. And you can also manage your tenants and tenancies. You can track your rent collection. You can invite your tenant to their own dashboard so they can also report maintenance issues to you as a landlord. And the third section of the platform is finance. And there basically you can, all right. So in terms of finance, you can see your options for buy-to-let mortgage or remortgage. And you can also, perhaps I can do like a quick demo so you can see basically how it works. All right, so this is basically the Lendlord platform. This is the main dashboard. As you can see, the platform is separated to three sections: the invest, manage, and finance. In the invest section, you can find on the on-market properties tab properties from agents all around the UK. And so you can find some information about the property, but you can also see the initial analysis based on what the platform analyzed. But I will show you after that you can enter the analysis and tweak the data and play with the numbers. We also have properties from auction houses, online auction houses, all around the UK. And you can also define sourcing alerts to get notified on property.
Check. I'm back.
Yeah.
Thanks, Avirman. I don't know what happened there. Thanks, guys. Carry on. Carry on.
Right. Yeah, good to have you back. All right. So in the sourcing alerts, you can add properties to your own watch list. And then for properties on your watch list, you can get notifications on a price increase, price decrease before an auction date, for instance. But you can also create search criteria based on several parameters, and then the platform will send you a notification every time there is a new property that was uploaded to the platform that match your criteria. So basically you can just turn on notifications to get notified, which is much better than search by yourself. This is part of our premium plan, which is £99 per year. And for this webinar, we provide you with 40% off for Fabrik customers, audience. So we will share the links on the chat later in the webinar. Then the deal analyzer is a very strong tool to analyze property deals. You can start with typing the address, and then you get some information about the property. And then you just need to put the purchase price and the expected monthly rent. And then the platform will calculate the first-year metrics for you and the long-term metrics. And starting this point, you just need to tweak the data, adjust the numbers, and see your potential. Some videos that can help you work on the platform. You can also use the postcode information page, which is unlimited to our premium users, to get more statistics about any postcode. It takes a few seconds, but you can see the capital growth in the last 5 years, some statistics about rental in the area. You can see the Google map and some area facts in terms of how many properties now for sale. You can see average of asking prices in this postcode, recent sales, some comparables, data about council tax, local crime, and some data about demographics in terms of the election, commute methods, age distribution, and schools. So it's a very powerful tool when you need to assess a potential acquisition. And this is the invest part. On the manage part of the platform, My Portfolio is the page to manage your existing portfolio, and we can manage more than one owner. So basically, you can take a view of this specific owner only, or two owners together, etc. You can apply different views. And on each property, we store more than 150 different data items. Having said that, there are no mandatory fields. So you can just start with typing the address, some basic information, and then you can tweak the data afterwards. On the My Documents tab, you can upload documents to different levels. It can be common documents, but also documents for each property, for each owner, and for each company. And then in the packages, in a few clicks, you can create package of documents and share them with either your mortgage broker, lender, or potential buyer in a few clicks. This is also part of our premium plan. My Tenants, this is a place to manage your tenants and tenancies. On the payment schedule, you can track your rent collection and get maintenance reports on this tab if you invited your tenant to their dashboard. And the cash flow section, this is the place to manage your income and expense transactions over time, allocated to a specific property. And on the transactions page, you can link your bank account. And when you link your bank account, this is also part of our premium plan, linking bank account, then you can get automation of your income and expense transactions. So it will be allocated to the relevant property or to a rent payment automatically. So again, the managed side, we can also generate reports. It's very enhanced. So feel free to create your free account and reach out to us to get more information, but it's also quite intuitive, so you can start walk around and see how it goes. And the third part of the platform is the finance. And here you can find a questionnaire for bridging finance to get indicative terms for bridging finance in a few clicks, or in the mortgage remortgage section, you can find the available products. Basically, it's connected to a live feed from buy-to-let lenders. So you can see the current rates, the fees, and you can also apply online using our digital broker to get the buy-to-let mortgage. So this is in a very high level, the Lendlord platform. And we will put in the chat the promotion for the premium plan for Fabrik customers. And Dale, if you have any questions, feel free to ask.
Yeah, thanks, Avirman. I hope you can hear me now. If that happens again, let me know. I may be having a problem with the headset. Thanks for that, Avirman. So effectively what we've done, we've integrated some of the Lendlord tools into our website. So you can actually click on the tools section on the top of our website. It's got the deal analyzer, flip analyzer. You can do bridge finance through their platform. So it's effectively integrated all these tools. One quick question, Avirman, in terms of the property data, you're doing some deal analysis now where you put in the address and the rent. Where do you pull your data from? And obviously, how accurate is this data?
It's an important point. I will start with the accuracy of the data. So when you use online tools in general, I think it's very important to use them and assess the numbers before you make any decision. But you need to understand that the data that we see is mainly indicative data. So if you do like property, we allow to estimate the property value, for instance, online on Lendlord. Also, you can estimate the rent in this
Yeah,
area, things like that. But this is basically the data that we will show you is based on the history, based on different data points, like the size of the property, number of bedrooms, the level of how much the property is basically renovated and things like that. So eventually, it's an indication. And I think
yeah,
we need to say that it's basically if you get, okay, this property valued 120K, you will still need to get, like a surveyor to inspect the property in order to get the real value of this property, or a
yeah.
buyer that will basically buy it in the value we think
Okay.
is valued. But I think it's a great way to get indication because usually the data will be, quite accurate, but it's not 100% guarantee that this is the value. And
Okay. So the data sources, does it use Rightmove or things like Property Mark, or where does it pull the data from?
yeah, it can be many sources. The main source
Okay.
would be also we use property data. It's a great company, great
Property
property.
data, yes.
Yeah, great property company. We
Yeah.
also have our own aggregated data. So it's a combination of data source, like the channels. But
Okay.
again, you need to rely on physical valuation if you want to get the real value, I would say. But it's a great
Yeah.
indication.
Great. And then so effectively you can also manage your property finance and your mortgages and everything else from the platform. What would you say is the main benefit for clients such as ours that are building a portfolio or investing in, off-plan or buy-to-let apartments? What would the main benefits be of using the Lendlord platform?
So first and foremost, to be on track. So like if you have many different ways to manage your data, to manage your cash flow, all the documents. Then you have here a very secured platform in the cloud. You can access it from anywhere at any time. We also have mobile apps for iPhone and Android, so you can get any information you need at any time using Landlord. And you can also get reminders. So for when your mortgage product is about to expire, when you need to renew your landlord insurance, gas safety certificates, EPC, all of these important key events can be managed using Landlord. But you can also, for the long term, you can track the performance of your properties and make decisions. Perhaps I need to sell this property and buy a different one. You can also track your equity level, and then perhaps there are opportunities now to raise more capital from some of your properties and invest in new properties. So I think it's very important to use one digital tool, and I think Landlord is a one-stop shop, so you can basically find everything in one place, and it will help you run your property portfolio, but also to grow it wisely using
Excellent. Yeah, that's great. Thanks, Abraham. I agree. And for me, skills and learn to understand the market, but using the right software is very important now. If you use the right systems, the right software, you can make sure that everything's managed effectively. Your taxes are being paid. So I totally agree with that. And it is about assembling a team of skilled professionals within their sector. So appreciate your time today, Aviram. And as mentioned, anyone on the webinar will get access to basically to use the platform on a trial period. Anyone using on the webinar will get that emailed to them. So thanks for that, everyone. We appreciate your time. So we'll move forward now that I'm back on track. Sorry about that, everybody. But yeah, let's bring up the screen. So we've got today, obviously myself, I've been in the industry now for 18 years. We've helped many investors from all over the world, really, with their investment portfolios. And then also we have Avirman from Lendlord, and I have Pavandeep Mandia, who's going to be giving us some information about tax. We're not qualified to giving tax advice, but as I mentioned, it's important to assemble the right team. We've also got Johnny Grant from My Property Host, who deal with short-term lets, the short-term let market. So I won't go into too much detail. Fabrik Property Group are an award-winning consultancy. We specialize in asset-backed property investments, but we take a holistic approach. We make sure, number one, that you've got a proper plan and blueprint for investing. And, you're not just buying a property on impulse, but you've actually got a plan over the next 5 or 10 years to build a portfolio. And number two, we focus on high quality builds in areas where there is high demand for rentals. We're very committed to compliance, making sure all the AML procedures are done correctly, as well as lifetime after-sales support. So we'll just quickly go through the housing market. I think data is very important when investing in property. So if we look at the latest house price indexes recently, we've seen a nationwide January house price index was about 0.7%, plus 1.1% from Halifax. And then a 1.7 year-on-year increase in house prices. So we are seeing a bit of a slower market. In terms of London, that's a market itself. We are seeing rents increase there, plus 6.8% the last year. And then also Rightmove January house price index shows 1.3% and a 20% rise in sales agreed compared to this time last year. In contrast, the Office of National Statistics in December mentioned they depicted a slower growth compared to other data. However, the data does lag, so we normally get our updates a month later. But according to Rightmove, the rents are on the up overall, and house prices are slightly declining this year, probably around 1 or 2%, according to projections. So if we look at the latest house price indices, and I hope you do have a pen and paper, obviously you can note these down. We will share this with you as well. I do a monthly market update. Halifax projected a 1.7% house price change, 1.1% in the last year. And then nationwide, their price index, as mentioned, was 0.7% month change, the Office of National Statistics. And then you've got Rightmove as well as Zoopla. So overall, the national patterns, England, you're looking at about 2.9%, so definitely slower growth. And then Wales minus 2%. If we look at the annual house price growth, the regional patterns, London is down around 6%, down from 3.6% year on year. And then you've got the Northeast, Yorkshire, Southwest as well, and all those different areas. So again, data-driven decisions are important for us. We will take out the latest house price indexes and look at what the market's doing in different areas. Regional rental variations, Northwest has done quite well. So we have seen quite a lot of rental inflation in the markets, and that's basically because of the shortage of supply. So if you look at the latest index from Rightmove or Zoopla, are very good sources. Rightmove estimates agents on average have 11 tenant inquiries per available rental property, which is a significantly increase from last year. And according to the housing report by Property Mark, an average of 9 new applicants per available rental. Well, Homes of England reports said that the supply of new homes last year was 234,000 new homes in 2023, which is a 6% decline from the previous year, and short of the government's target, which is to build 300,000 homes new year. So what does this mean? Obviously, when we look at the UK, the population, according to a recent census by the government, is expected to exceed to 60 million by 2045. And there's a scarcity of landlord instructions for renting out properties. So there's actually a shortage of rental properties coming to the market. A lot of this is also to do with government regulation. They don't do us many favors with Section 21, and tax and stamp duty tax. So I'm looking forward to the spring budget to see if there is any relief there, because, at the end of the day, the market needs landlords, and so do tenants to supply accommodation. In terms of rental yields, the Northeast boasts the strongest rental yields, with 8.7% projections, followed by Scotland, Wales at 7.7%, and the Northwest at 7.2% gross. Despite London registering the lowest yields at 5.4% growth, there has been a fair amount of inflation in London. So onto the housing markets, the 5-year projections. This is the latest Savills projection. So as you can see there, the Northwest is 21.4% up. We've got properties in places like Sheffield and other areas, which, we've seen a considerable growth, but they are looking at 2023. As you can see, there will be a bit of a decline. So we expect prices to drop still around 1-2% on average, and then start to climb according to Savills from 2025 up until 2028. So again, Northwest, 21% growth over 5 years. Northeast, these projections can, of course, change subject to inflation. Inflation was at 10%, so they had no choice but to increase interest rates. But with inflation now, there's a bit of light at the end of the tunnel, and inflation is not as bad as it was at around 3%. It's likely interest rates will hopefully start to come down, and house prices will start to move again. So on to the exciting part of the webinar. Today I wanted to talk about how you can utilize technology and AI, artificial intelligence. I've been using it in my business. I think it's a fantastic tool. Some people are sort of against it, I guess, because they feel it doesn't have context. It's always better to deal with a human. But just a few things from my perspective. AI will help with important data-driven decision-making in property investments. So it can help you assess things and do research. It can also help with portfolio management. So there are softwares coming available now which can help with portfolio management, as we discussed with Lendlord. And then it can help you with your research as well. So there's a lot of new platforms coming to the market, and maybe make some notes. I'm happy to share this after the webinar. Property uses blockchain and AI to simplify real estate transaction processes and allows for secure and efficient property transactions. You've got Quantum RE, which uses AI to allow homeowners to sell a fraction of their home equity to investors. And then you've got Reonomy, provides commercial real estate data platform powered by AI to provide comprehensive property information, research, ownership details. There's a few others, such as property data we mentioned. So that pulls in all the live data. I think there's a monthly subscription to that, but if you are a professional investor, it's hugely beneficial, and we do use that in a lot of our research. Realize is a great platform, especially for developers looking for properties, insights into the local market, rental yields, and opportunities for developments with and without planning permission. So just a few platforms to name there. On to the next one is ChatGPT. That's a great tool for me for a couple of reasons. Number one, market analysis. I mean, one thing to note, the data is a little bit old still, so it's still pulling data from 22, 23. It may not be 100% up to date, but the power of having ChatGPT is, like, in my opinion, almost like having a property expert or tax expert or legal advisor in your pocket. Obviously, these things you need to check with I always recommend using a qualified tax specialist such as Pav and Johnny for management for the personal touch. But just doing your research, number one, market analytics, it can analyze vast amounts of data very quickly and identify trends in the market. Number two, it can help with valuations. The algorithms can look at locations and give you indications of valuations and returns. It also helps with number three, risk assessment. So there's various factors like economic indicators, market volatility, and property-specific risks, which it can help you assess during the process, such as, asking things like, what's inheritance tax in the UK, or risks I need to consider when investing in UK property. And you'll be quite impressed with some of the answers it gives you. One prompt I like to use is what I do is I prompt it, because about prompt engineering is something I'm learning at the moment, is how, in the persona of a property investment expert, please advise what are the current taxes to consider, or please advise me on what the process is, the buying costs, investing in the UK. So you can almost ask it any question that you would ask a property expert like me. Now, the answers may not always be 100% accurate, but they're pretty much 95% there. So very useful tool. Number 4, portfolio management. AI can help investors manage their portfolios more effectively, as discussed. Number 5, predictive analytics. AI can use historical data to predict future outcomes, and it's all about identifying outcomes. I mean, when you're planning for retirement and you want to buy property and build a portfolio, understanding outcomes is the most important factor, because it's hard to predict the future. So it can manage a lot of data that way. Property management's another thing it can help with. And number 7 is compliance and legal requirements as well. So it's very interesting to see how the market adapts with AI. I'm certainly using it and implementing it, and we will be using it to create software that can build custom reports for investors based on their current age, retirement goals, current earnings, financial position, debt. So it's really intelligent, and it's quite exciting to see what the future holds. So we've been through Lendlord. On to next is tax considerations when investing in the UK. So I'm just going to pass that over to Pav, and then he can run us through UK tax considerations and what you need to think of in terms of legislation, and then I'll ask him a few questions as well. So welcome, Pav. Welcome for joining us. Thanks for joining us. I understand UK landlord tax helps with a range of tax specialist advice for our clients, such as setting up limited companies. But yeah, do you want to maybe just run us through the taxes to consider when purchasing property and a bit about what you guys do?
Yeah, thank you very much, Dale. Hi there, everyone. So yeah, my name's Pad Mandir, and I'm one of the tax advisors here at UK Landlord Tax. We're a firm of property tax specialists here in the UK, and we offer tax advice for landlords who are looking to invest in property now, and also landlords who already own properties in their personal name, or that whether they own them in a limited company. So the taxes to consider when investing in property in the UK. First of all, when you purchase the property, you will be required to pay stamp duty. And for landlords who are looking to buy their first property, they may not be liable to the high rates of stamp duty. However, for any additional property purchases, and for even a first property purchase in a limited company, then the stamp duty rates will always attract the additional 3%. So that's the first initial tax involved with the purchase, the stamp duty that will be required to pay on the purchase. And then the other taxes are when you start to receive the rental income. So landlords who own properties in their personal name will be required to pay income tax. And the tax rates in the UK are 20% up to £50,270, 40% up to £125,000. And then when your total income exceeds that amount, the tax rate increases to 45%. The important thing to note here is that specifically for expats, so non-residents, if they're looking to buy their first property, they'd only be taxed on their UK income, which would be from the property in the UK. So then the incentive is that they'd be able to offset their tax-free personal allowance, which is currently £12,570. So they'd be able to receive that amount of rental income per year tax-free. For limited companies who own properties, when they receive rental income, they pay corporation tax on their profits, which is at 19% on profits up to £50,000 and increases to a maximum of 25%. And then when it comes to selling the properties, landlords are required to pay capital gains tax, which is based on the increase in value of the property that it's attracted during the time that they've owned it. There are specific reliefs that landlords can claim to reduce any capital gains tax payable, but the tax rates are 18% for residential properties in their personal name and 28% for high rate taxpayers. For limited companies, they also pay tax when they dispose of the property. They also pay corporation tax though instead of capital gains tax. Limited companies pay corporation tax at the same rates on their rental income and when they dispose of a property. And the final tax to consider is inheritance tax, which does often get overlooked. So whilst inheritance tax is mainly a tax that's paid on death with owning properties, it's important that the foundations are put in place at the outset. So although it may seem a long way away when you need to actually pay inheritance tax, it's important that the foundations are in place at the outset and you plan for inheritance tax at the very start. So yeah, the inheritance tax rates are 40% of the equity that a landlord would have in their properties above the £325,000 rate band. Yeah, so those would be the taxes that landlords would need to consider when owning properties.
Thanks. Thanks, Pav. That's great. And just on that question, I mean, for me, one thing, when people buy property, I think a lot of people don't think about things like inheritance tax, capital gains tax. I know you said there's an income tax threshold, but how can one mitigate or protect themselves against things such as that 40% horrendous inheritance tax charge? How do we make HMRC our friends or mitigate taxes in this case with regards to things? I know it's it's only people who are going to be affected over the 325,000, but are there structures or ways to avoid that or mitigate tax?
Yes, so with owning properties in your personal name, it can be difficult to adjust for any inheritance taxes. The simplest way would be to, for example, gift the property to a child, let's say. However, that does promote or prompt a capital gains tax charge. So it's circumstantial and it's dependent on each individual, but we tend to advise landlords to consider the use of what's called a family investment company structure. And that involves, it's a limited company setup, so any ordinary limited company. It's just that it's structured in a way that it involves the children at the outset as minority shareholders, say owning 1% each. So it involves the setup of the company, including the children. So as the property increases in value, that future growth in value doesn't form part of the landlord's inheritance tax estate. It's instead passed on to their child.
Great. So there are ways to, especially if people are planning to build portfolios, to set it up in a structure, limited company or a trust, let's say, that can then offset future inheritance tax or pass. Because it's about legacy at the end of the day and creating wealth.
Yeah.
I guess that's something that can be passed over to our children or our children's children in a way that's tax friendly.
Yeah,
Great.
that's it. Yes.
Okay.
Yeah.
And are there any specific tax incentives or reliefs available for investors at the moment or in different types of property investment, like holiday lets, for example?
Yes, so just for any properties. So as you can see by the income tax rates there, it's 40% for high rate taxpayers when your total income exceeds £50,000. So when you factor that together with limited companies paying 19% on profits up to £50,000, and the highest it will ever be is 25%, which is when profits reach £250,000. In recent years, it's been more of a potential to consider the use of a limited company for the purchase. For that reason, the lower tax rates, and it also comes with the inheritance tax planning. So they work hand in hand, really. So just to put it simply, if a landlord is looking to be serious in their property investment plans and they want to be an entrepreneur in the property field, then certainly the benefits with a limited company do usually outweigh the benefits of using the personal name. And when it comes to short-term holiday lets, specifically what HMRC call furnished holiday lets, there are certain tax advantages given that there's a Section 24 restriction where high rate taxpayers can no longer offset mortgage interest payments as an allowable cost to reduce their tax liability. Whereas for short-term lets, you can offset the mortgage interest payments as an allowable expense, even in their personal name. And if you put that together with the fact that furnished holiday lets, when the landlords sell them, the capital gains tax rates, instead of the 18% and 28% that I mentioned earlier on, there's a flat 10% tax rate is by claiming a relief as what's called business asset disposal relief. So that's also an incentive of using short-term lets.
Excellent. So again, guys, I mean, we could go on a whole presentation about the subject of tax. Let's hope that the government's kind to us in the up and coming budget. So, but how can investors, especially overseas investors, have, it's kind of like a gray area sometimes. I know you've got dual taxation treaties with some countries, some don't. How can investors ensure they're accurately accounting for their income and expenses for tax purposes? Is that something you do recommend they use a tax expert such as yourself?
Yes, certainly.
Themselves?
Yes, certainly. So, yeah, we're a firm of property tax advisors. We offer tax advice, and we also are a firm of accountants, so we can assist with reporting income to HMRC and filing company accounts or filing self-assessment tax returns. Specifically for overseas non-resident landlords who are looking to invest in the UK. Of course, it's unlikely that they would be aware of the UK tax rules, especially if they've never lived in the UK previously. So we can assist with the reporting in the UK, and there are strict reporting requirements. So specifically, when you come to dispose of a property in your personal name, there is a 60-day requirement to report that sale to HMRC and pay the capital gains tax due within 60 days of the sale. So we'd certainly advise any landlords who are looking to invest in property or already own a property portfolio to get in touch with us. We offer telephone consultations.
Okay, great. That's good to hear. So we've partnered with UK Landlord Tax. They specialize in helping landlords with their tax. And if you need a free consultation, just let us know. Put yes in the comments or drop us a message and we'll put you in touch. Fabrik Property Group are not qualified to give tax advice. We do partner with companies who we believe can provide an excellent service. So thanks for your time. And that's great to hear that there are ways to creatively structure your portfolio that can be tax efficient in the future. Thanks for that, Pavinder.
Thank you, Dale.
Great. And then we're going to move on next to, very quickly, guys, short-term lets. I've got Johnny Grant with us. He works for a company called My Property Host. I've worked with them now for several years, and I've been very impressed with their service. They use another prop tech platform called AirDNA to analyze the data and provide projected outcomes of occupancy and rental rates. So far, we have delivered on a couple of projects, one of them in Liverpool and a few others. Welcome, Johnny. And do you want to just give us a quick introduction on My Property Host and how you guys can help investors maximize the returns of short-term lets?
Yeah, thank you, Dale. Yeah, so my name is Johnny Grant. I head up partnerships for My Property Host. I've worked with MPH for the last 4 years, previously working in wealth management, actually in South Africa, a bit nearer to Dale there. And look, My Property Host, what we offer is an end-to-end management solution for clients looking to do short-term rentals. What we look at and focus on is helping clients throughout that process. There's a lot of work that goes into short-term rentals. It's not quite as simple as setting up an Airbnb and letting it go, which a lot of clients find out and then come to us and ask for help and how to manage that and how to maximize those returns in an efficient manner, which doesn't take up too much of their time because it's quite an intensive process to keep on top of. And as Dale mentioned, that we use a number of different softwares to help us. One in the forecasting of sites, which is obviously very important. We work on selected developments across the country as opposed to individual units. So we have the ability to hire a site manager and look after specific sites and ensure that, one, the operations are smooth, but obviously to give a good overview of what those returns would look like. I think that's what Dale's brought up here for the I-Quarter.
This is just, can you hear me? Yeah, so
Yeah.
this is just an example of a development we've launched as a completed project. We've got some 2 bedrooms, very good value for money there, about £171,640. So I just wanted to show the difference on the projections of a normal let. Your normal letting, obviously it's more, standard lets, or I guess your regular, rental, maybe a bit of a lower risk strategy, I guess, for some. But the return, the net return after all costs is quite lower. So where serviced apartments or short-term lets are permitted based on £98 per night and a 80% occupancy rate projected via my property host, we could be looking at projected returns of 8, sometimes 9% net. In fact, we do have one, Johnny, I think we've got one of you guys in Liverpool at the moment, the Roscoe. And how's that going on the short-term lets?
Very good. Last year, Liverpool's an interesting market because there is a higher blend of much higher weekend bookings compared to midweek, which is quite consistent throughout the market, but can be more prominent in certain cities rather than others. But that's certainly the case in Liverpool. It's a great city. Look, you get a lot of big leisure market there, but also what we're focusing on is more practical accommodation in urban locations, right? So these are less of a holiday rental from a vacation point of view, right? It's practical accommodation. Majority there, people are there for work, using it as a base, but there's also a lot of a great blend of guest profile that come into the properties.
So you would say it's more like corporate service apartments rather than your, I guess what some people fear is your hens and your stag parties and things like that.
It's exactly that. We're the complete anti to that. So we vet the guests throughout the booking process. Obviously, we've mentioned that those kind of stays are not permitted. That doesn't stop all people, of course, but what we look at is the names and ages of the guests. We ask them a series of vetting questions. But the crucial part that we do is that we check in the guests in person. It's a hotel meet and greet style service. So, if people are rocking up for that kind of activity, it's pretty easy to spot and they don't get let into the property. So, we prefer the hands-on service. It's more of a professional management company rather than facilitating the bookings for short-term rental.
Excellent. Well, so far so good. I mean, you guys are doing a great job for some of our clients. Here's another example, Birmingham, which is definitely one of our top picks for 2024. In my opinion, it's where's the high-speed rail coming. It hasn't been scrapped just yet, at least. So there will be a lot of investments. The Ladywood regeneration, which is in the Ladywood estate, Berkeley Homes have now committed to a £2 billion investment in the area. So we have a really lovely development of around 81 apartments, boutique apartments with long-term and short-term lets permitted. And as you can see there again, it can be quite attractive on the short-term lets. Have you guys got exposure in Birmingham at the moment on any products?
Yeah, we manage a number of different properties in Birmingham, between sort of Birmingham and Manchester, where the highest proportion of our properties under management are. I think for obvious reasons, those cities, obviously outside of London, probably have the busiest amount of visitors per year, especially for work and obviously for other reasons. Birmingham, we've seen extraordinarily high occupancy rates. Looking at some of the data pulled in from properties we manage, last year we hit, I think, just over 86% in Birmingham, which is a very high number. We benchmark for an 80% occupancy in these regions, and obviously that has an effect with some of the pricing. So it can have higher occupancy but slightly lower rates. And it's because we're seeing some longer stays and consistent demand throughout the year. So what we see in short-term rentals is there is seasonality, but these aren't hyper-seasonal locations like a Cornwall where you have some years extremely in demand. Whereas in these urban locations, yes, maybe January is a bit quieter in terms of the rates. The occupancy and the demand is consistent, and that's why we're hitting these high occupancy
Gotcha.
rates.
Well, it's basically apartments competing against your standard hotels, right? And I guess it is
That's exactly
the
it.
demand there for more spacious accommodation, especially for people working more remotely now and traveling more often. So it makes sense. So how can property owners ensure? Question for you. In fact, this is a big one. Recent legislation by our the UK government, there's been some regulatory changes affecting short-term lets where you'll need to apply for planning to enable them to do short-term lets. So what are your thoughts on the new regulation? How will that in turn
So
affect
Marco
the market?
has proposed sort of new regulations for short-term rentals. And it's something that, as my property host, we've been looking for we knew that some regulation was going to happen, right? At present, short-term rentals is a fairly unregulated industry compared to long-term rentals and ASTs. Now, in short, what this is a registration system. So for landlords will have to register their properties to let the government know, the councils know, that they're being used for short-term rentals. Now, this, in effect, the default position that the permission will be granted. So there's not, there will have to be a reason for that not to be the case. So the onus will be on the council, the government, to find, quite strong reasons to reject that registration. Now, I think from our point of view, this will perhaps have an effect on the amount of short-term rentals in the market. But for us, that's a good thing because it's going to focus on better quality management companies like ourselves and better managed properties, which means higher rates. So from our point of view, we see that as a good thing. And the only downside is there will be an admin cost associated with that. We don't have details on what that will be just yet, but it's not going to be significant. And I think the crucial thing to say here is that properties that are already being used for short-term rentals will benefit from grandfathering. So by that means they will not have to apply to all this registration system when it comes in. They will benefit from having been used that before. So there's also an incentive there.
That'll be moving forward basically for any new developments, or would they have to go back? You're saying they may not have to go back and apply for current short-term let.
It will be new properties that are being registered after the regulations come in. So there's an incentive for people now, if they want to forgo that sort of admin cost and that slight hassle, to have their properties to benefit from that grandfathering when the regulations come in.
Okay, great. And then in terms, you've gone through some of the insights and everything else. What are the benefits of using a company like My Property Host rather than just like putting it on Airbnb myself or managing it myself? Supposedly, obviously, the big one is time and having the management in place. But what are the main benefits of using a company like My Property Host, would you say, as opposed to traditional methods?
Yeah, I think there's a couple of crucial points there. Number one is that we have a vast amount of experience. We've been operating since 2015. And we have access, because of the number of properties that we manage, to, again, it falls back to your comments earlier on software and how to manage that. So we have best-in-class property management software that allows us to plug in directly to the key booking channels, such as Airbnb and Booking.com. And then we also have best-in-class pricing software to maximize revenue across each date in the calendar. We use a company called Wheelhouse, which is an AI data-driven tool looking at all the rates and affecting the seasonality. But look, when people are looking at short-term rentals, they look at what you have here and look at the high returns, and that's fantastic. But to go out and do that yourself is extremely difficult, and is that time and that energy. Now, what we're here to do is exactly, and we're here to take that out of your hands, right? We're there to provide you the high returns, to take the hassle out. So we take care of the whole process for you.
Excellent. So again, as mentioned before, we've been using Johnny and Raj, who's the founder and CEO of My Property Host. He was actually a lawyer and completely changed the sector because he could see the opportunity and a gap in the market for a well-rounded short-term let management company focusing on good quality corporate lets. So thanks, Johnny, for your time. If anybody
My
does
pleasure.
want a consultation on short-term lets, how it works, projections on the existing properties that you're thinking of, maybe you've been thinking of dipping your toe in short-term lets but haven't quite done it yet for various concerns, we're more than happy to arrange a consultation with Johnny and his team to discuss it in further detail. So we've had quite a few questions coming through. Thanks for that. We will be collecting all the questions and coming back to you with the answers. We had a few technical issues today, so apologies for that. But nonetheless, there are some good incentives for clients as well. In our new project, I-Quarter Sheffield, we have just launched. It's a completed and fully tenanted development with short-term lets permitted. The building has been operational now for around 12 years or so. They had to get some EWS1 works, which have been done now. So everything's been signed off. Studios are from £98,000. We've got one-bedroom apartments from £151,000 and two-bedroom apartments from £171,000 next to the River Don, close to Sheffield City Centre and the university. So one example there of a property that you could invest in. But for us, I think the main thing, just as a few points or tips here, is not just about going in and buying a property and looking at the yield or whatever. I think you've got to, number one, look at acquiring skills. Number two, you need to assemble a team of professionals such as tax advisors, accountants, and management companies. Number three, you need to devise a plan. Am I doing normal lets, short-term lets? What's my strategy for the next 5, 10, 15 years? That's something we can help with. And number four is to create your structure. So again, that's to do with tax. Are you buying in a limited company or personal capacity, depending on your personal situation? Number five is leverage and mortgages. We do have a great team, including Darren at International Property Finance, who can help overseas buyers. It doesn't matter if you're from South Africa, Turkey, or wherever, Egypt, Israel, UAE, we can get you a mortgage in most cases. And you can leverage and build a portfolio using leverage than rather tying up all your cash into one property. You could rather buy multiple properties. Number six is choosing the right property. And again, we have systems and software in place now that can really help us predict the outcome using AI and software. And number seven is choosing the right systems like Lendlord, or whether it's property data or AirDNAs, to help you identify and predict those outcomes, but also manage your portfolio efficiently rather than you having to do all the work and pay an accountant loads of money. There's software and systems now that can do it for you. Number eight, make HMRC your friend, as I don't like to say that, but there are ways that you can work with the HMRC to make sure that you manage your portfolio and you don't have any hidden tax headaches, because a lot of people buy property and they don't even know what's ahead with inheritance tax. So it's a good thing that we discussed there. Number nine is management of property, making sure a good management company in place. And number 10 is scaling your portfolio. So that's something you are interested in. We are doing a portfolio building strategy now. We have software that helps us produce tailored reports for clients. So if you would like to book in a one-to-one consultation with one of the senior portfolio managers, just put yes in the comment section below, and we will definitely be in touch to arrange that for you. In terms of the questions that have come in, I think there have been a few questions, but we'll be very quick and then come back with you guys, because for whatever reason, I haven't been getting the questions on my presentation or on the Zoom for whatever reason. One of the rules is, what are the rules for first-time buyers in order to not be eligible for stamp duty tax? Pav, is that something you can help with, first-time buyers?
Yes. So if a landlord is looking to buy their very first property, then there's a stamp duty threshold.
Okay, great. And that doesn't apply though for second properties where it's a buy-to-let, right?
Yeah, so it's first
Just to be
property.
clear.
So most
property.
commonly that would be the main residence. So that's a first time
Main
buyer.
residence.
Yeah.
Okay, we must be clear on that, because I understand some clients have told me, agents telling them that's their first purchase, they don't need to pay stamp duty. Well, hang on, if you're buying it for buy-to-let, there may still be stamp duty tax applicable. So that's a good question. And we will share Pav's details as well. Regarding short-term lets, are we concerned about pending legislation? I guess we've sort of answered that, Johnny, but is there any comments on that?
No, I think we've gone over the key points there. If the pending legislation is basically a registration system, so that when those regulations do come in, there will be a small admin cost for any landlords who want to run short-term rentals, but anyone doing it prior to that will benefit from grandfathering, won't have to pay those costs or register those properties.
Great. Yeah, we'll keep everybody up to date as that legislation comes into play. But my understanding is freeholders of buildings which may be coming up will just need to apply for the permits to do short-term lets. So there'll be more regulation rather than just loads of properties randomly being let out on short-term lets. And I think that is to do with, like I said before, you might be in a nice quiet neighborhood where people are buying their homes to live in, and all of a sudden someone next door is doing a short-term let and someone's making noise or something. So it's just to bring better regulation into the market, I believe. So yeah, in terms of someone asked, can we use the discount code after the trial period? I need some time to look at this platform, get to know it. So thanks, Rajesh. I will basically look into that. There is a discounted ongoing membership with Lendlord, but we can arrange a 3-month trial just to get to understand the platform. And then if you do want to continue to use it, we can arrange a discount code to get a reduced rate on that. So we will send you more information on that. Other than that, I think time is up. So thank you, everyone. Like I said, if you want to book in a consultation, if you've got any questions about tax, we can organize a consultation with Pav Mendia from UK Landlord Tax. Short-term lets, we've got Johnny Grant. And if you're interested in the Lendlord software to help manage your portfolio, we'll certainly put you in touch with Avirman. So appreciate all your time and have a good afternoon and a great day. Thank you very much. Take care.